Hey, welcome back to Everything Money. We were just laughing because I asked I asked Paul, Baidu is the Google of China, right? And Paul said, yeah, and Google is the Google of the world. But we're looking today at Google versus Baidu, the companies, the financials, what their stock prices are, and are they justified? We know that Chinese folks cannot access Google, Paul, so they can't see your face, probably your Instagram. It'd be hard to find you, but they can, hopefully they can use Baidu to spy on you and all that stuff. But anyway, we're gonna look at Baidu and Google right now. Now, I would say, Paul, you mentioned with foreign markets, there's a little bit of financials we'll have to look at going forward, but we'll use the Everything Money software to take a look at Alphabet and Baidu, and Mo, you want to trade these? We'll see if people are trading these.
I think so. I think that's a good idea.
Great, we'll do that too in this video.
Is there a lot of trading of Baidu?
Yeah, people like to day trade it.
Oh, wow.
Yeah.
So there's a lot of volume on it.
Yeah.
Let's start, Paul. Obviously, Google is the biggest and best thing ever made. Tell me about it.
So I'm going to show the 8 pillars page. This is all part of our software. We'll explain that soon. But Google's phenomenal. I mean, they just do everything right. And of course, the market does everything wrong. It overvalues them potentially. Our 2X's are purely valuation metrics, the price to free cash flow and the PE ratio. So, and these are longer term. These are 5-year price to free cash flows and 5-year PE. But they are buying back shares. They have very little debt. Their cash flow growth is huge. Their revenue growth is huge. Everything's big here at Google. I mean, it's a phenomenal company. It's an advertising business. I think 98% of their revenue comes from their advertising or whatever it is. They own YouTube.
Yes.
The very channel that we're on right now. So, Google's incredible. I would use a stock analyzer tool to definitely value Google. Should we do that now?
Go ahead.
All right, so let's put it in now. I'm going to look at a 7-year analysis. And then what we do here is we have 1, 5, and 10-year numbers. And I'm going to sit there and go, okay, Google's already pretty big. Let me go 12, 14, and 16% in terms of revenue growth. Actually, you know what? I'm going to go a little bit higher. It's Google. They're doing a great job. They're buying back shares. So let's assume they don't buy any more shares. They buy back 0.5% a year. They buy back 1% a year. Their profit margin. So here's the deal, guys. Their 1-year profit margin is considerably higher than their 5 and 10-year numbers. I'm probably going to go somewhere in between. I'm going to go 22, 24, and 26. And then free cash flow, I'm probably going to go 21, 23, and 25. PE. Now, guys, this is where the art of investing comes. What PE do we want to assign to this company 7 years from today?
Yeah.
And then the next line is what price to free cash flow do we want to assign? They're currently selling for 29 and 30 times. Now, I just don't believe a mature company can justify that unless they're really growing incredibly fast. Is this incredibly fast growth? Yes, but as time goes on, my assessment is they probably won't grow as fast. But I'm still going to I like Google as a company and their balance sheet. So I'm going to go a minimum of 15, 17, and 19 times both of these, which is higher than I usually do. Now, I always go 15, 12.5, and 10% on my desired return because I want to be conservative there. This is about the market return. This is about value investing. This is really deep value. Go down here, click Analyze. Tells me right here, if I believe these high numbers, Google's a buy all day. It's $2,700, and if I believe my high assumptions, I should buy it all day. Here's the cool thing. It's pretty close to my middle assumptions.
Yeah, it's $2,700 right now.
Look at that.
22.
So I'm going to be a buyer of Google at some point here soon. At what price? Probably somewhere in between these two. I don't know. I'm going to go do more research on Google because I see this going, wait, this is a great company. And I think I was being somewhat cautious on my numbers here, 15% revenue growth over the next 7 years. Their revenue is currently $220 billion. If they do 15% growth for the next 7 years, is it possible they get to 585? I mean, the world's growing, everything's growing. I just look at it saying, maybe that's the case. I don't know. I look at it going, okay, that's not a terrible assumption. In the last 5 years, they over doubled anyhow. So, all right, it's not the worst thing in the world to look at. So I'm going to look at this a lot closer.
YouTube itself for Google brought in $20 billion in revenue. Am I right that there is no... Mo, am I correct that YouTube hasn't started making movies or television shows?
So they have YouTube TV.
Oh, that's right.
Yeah.
But it's all user... I mean, talk about a cheap talk about cheap production. You're not making a $400 million X-Men movie.
I don't think they have a studio yet.
We make the content. We make the show.
We make the show. And then the movies of stuff, people, they buy them and just put them on their platform of YouTube TV. And so, like you said, they don't have a studio like Netflix, Apple, etc.
I mean, it's not that big of a piece of the pie of Google, but I'm sure there's a lot of room to run here. And speaking of room to run, if you're looking to trade Google, Mo, are people trading this in the BidNest Nation, baby?
So the last time that they went through the sweet spot was November of 2020. Since then, it's just been a power stock. So this is a great example. I don't think I've showed on this show because we haven't had an example, a power stock for almost a year. So this is what power stocks do. This is back in the day when I said it was easier to do long-term trades. This is what you would see very, very frequently. A stock that would come up through the sweet spot and just coast along that overbought area for a very long time. So right now it's in that area. I'm going to pull up the daily chart just to show you guys that it is, in fact, a power stock. A stock that means a stock price that is making new all-time highs and over all four of these major moving averages. You're seeing that with Google. So right now, let me go back and just tell you how to trade this. If I was you, I would, with all that being said, I would probably start taking some profits right now. And taking profits just means go back to your initial base investment because you're starting to get a little bit of a rollover here. You face some resistance at those all-time highs. You're starting to get a little bit of a pullback in price. Take your profits off the table, put some money in your pocket. If this thing turns back up like this and goes to new all-time highs, go ahead and add your profits back onto it and continue making money from there. But this is incredible, Seth. I haven't seen a power stock like this in a long time.
Much like a lot of our Chinese stocks that we look at, Baidu is beaten down like all the other ones, Paul. Momo, Baba, Alibaba. Baidu was sailing high.
Look at this. In February, it was at $335. $40.
Yeah. If I would have told you, you always.
If I would have told you that in the next 7 months it's going to fall over half, you'd be like, "No way! Look at this stock. It's going to the moon. This is crazy. You're an idiot, Paul. It's not going to happen." Okay. By the way, most times it does not happen immediately. But if you drive, if stock price and value is driven by cash flow and profit, then the value is driven. What's driving this price? It's the market's emotions. And in that time period, China's gotten a little more strict about things, so that's why the stock price has dropped over half, over 50% drop. Mm-hmm. And we look at Baidu, look at their numbers. It's funny, the revenue isn't growing a ton. 10, 12, 12.5, 11, 3, 12.3. It's not growing like Google is. Net income, 2 to 7 to 6.8. That's a lot. That's a big jump. Shares outstanding, about the same, a little bit higher. Let's look at their cash flow statement annually. 1.8, I mean, it's really not growing a ton. 1.85, 2.9, 2.1, 1.4, 2.9. So then I'm going to look at the stock analyzer tool immediately. Guys, look at these growth rates. It's actually slowed in the last 10 years. As time has gone on, the growth rate has slowed. Why? I have no idea. But I'm going to go 8, 10, 12% growth rates. Take a look at this. See what you think. 2%, 1%, 0% for share change because they have grown their shares a little bit. Margins right here, and then valuation, PE. I don't like the fact that they're only centered on China. To me, that's a limited market. Even though it's a huge market, it's still a limited market. I hit the analyze button. The stock's currently 150 to buy.
Look at that.
So here's a company that doesn't look as good as Google, but if you believe my assumptions above, I'm buying it here all day long. And I'll probably make 12 to 15% return on my money if I believe these assumptions I've made above.
You know, it's funny, Paul. You always go back to what if I would have told you the stock would have plummeted 8 months ago. I think you might have said this, and the comments on our video of Baidu, Kathy Wood disagrees with your evaluation. Sorry, someone says they unsubscribed. We did too little research, and this did not age well. You have to understand the moat that people have, and people were buying this. They even said that this got what
did I say it was worth back then?
Well, it's funny is this video didn't turn out very well. This stock skyrocketed to 350 and is now sitting at 185, which is still 2 times higher than when the video was done. So now I think about it, you might have said it was a $90 stock or something.
No. When was the video done?
Oh, when was this video done?
Yeah, when did we put it up?
8 months. Look at that, January.
That's not twice as high as it was 8 months ago.
Also, saying that Baidu is a moat is one of the most ignorant statements I've ever heard in my life. Have you ever heard of a little company that we just talked about called Google that can come in and take out Baidu very quickly?
Well, that person's wrong, by the way. January of 2021, the stock, January 23rd, 2021,
yeah,
the stock was...
So I guess when they...
Wait a second, the stock was 260, and they're saying it's double where no, you're wrong. It's actually at 185. It's lower than it was when we said when we posted the stock price.
So I guess that's the gist of it.
Thanks for being stupid. I appreciate it.
Yeah, that's the gist of it. When you're saying this stock is in a void at 260 and then it skyrockets to 350, we do look stupid for a couple weeks, right? I mean, and then sure enough, we look.
And it can happen. It can go the other way too.
Yeah, of course.
So anyhow, that's just the way it works. And by the way, everything's about the assumptions you're making. And I change my assumptions based on, but I'm not doing the thorough research. I'm going to start with a high level. Now I see this and I go, okay, maybe it's time to pay attention to Baidu. Maybe it is. I don't know. I like the Alibaba play as my China play, as opposed to Baidu. I still like Google more. I'm just going to wait for the price to fall on Google. I think I'd rather have Google at this price than Baidu at this price, I think.
Mo, are people trading Baidu in the BidNest Nation?
They do actually a lot. So right now, what we're looking at is everything's beaten down, and you're seeing a lot of these Chinese companies that are starting to move right towards that sweet spot. So any of these, you can really put a tracker share on them and go on from there. But I think I would look at it from a daily perspective instead, just because you do get those days of big fluctuations up and down. So right now your struggle is that you're facing 4 major moving averages. If you want to, just keep a watch on this thing, let it move up through the sweet spot, make a couple bucks on it like you did a couple of weeks ago, and move on from there. But right now, when it comes to China stocks, I think I would not be trading these things. I would only be looking at them from some kind of value perspective. But the volatility is way too fast to be in them overnight. You're going to get burned at some point.
If you're interested in this conversation, you can join everythingmoney.com. You can get access to the software behind Paul, the stock analyzer tool, the data that we're providing, and join a community. Paul, how many people are in there now?
Over 6,200 people have access to our Discord.
They talk just like we do.
6,300, I don't know the number.
It's very organized, and if you have questions and you're new to this, you can join our community, get access to the software.
Let's show them the software, huh, Seth?
Yeah, please do. What do you got over there?
So guys, this software was created purely because people who are watching the channel said, how do I get software from you guys? That was literally it. So I said, okay, let's get some developers on it. Now we have a mobile app, fully functional. You get all 8 pillars, all 30 years of financial data, stock analyzer tool, exclusive daily content just for people who are part of our software, access to all 3 of us, real estate calculator, biggest thing here, Discord community. Guys, people are in here talking about crypto, and all of this for 87 cents a day. If you are serious about financial future, that's it. 87 cents a day is less than a cup of coffee. You get all of this versus $1.99, $1.99, and $35. You don't get any of that stuff. This is a no-brainer, best value play you'll have. Just click the link below or go to everythingmoney.com and you can sign up very quickly for 87 cents a day.
That's our take on Google versus Baidu. We appreciate you watching. Follow more of our videos. There's one coming up at the end. Click on it and keep learning, and we'll love having you. Fondle and thumbs up on the way out. We'll see you next video.